Got Victor Adair joining me live from the trading desk right now. Vic, it's hardly an original question to start talking 2018 and asking you what you've got in front of you there, but what are the kinds of things that you're looking at as we go into the new year?
Well, Mike, I was very interested to listen to Lance Roberts. He and I think a lot alike from the things he had to say. If I could get right and start strong here, I'd say that my core expectation for the year ahead in the market is that we're going to see risk appetite get a really nasty surprise at some point. I would say that right now, the most crowded trade in the world is a giant short put position. Okay? Any which way that can be expressed. For instance, right now, speculators have the largest net short U.S. dollar position versus the euro currency ever. They've got a huge long position in crude oil. The fundamental bet across markets, whether it's currencies, commodities, certainly interest rates, and certainly stocks, and the more risky stocks, the better. The bet is that the market's going to keep going up and volatility is going to stay low. You know, I just love to think that, and when I say love to think, I mean just as a trader, I think that's a market that is cruising for a bruising.
Well, it's as I said to Lance, what worries me is when it starts seeing it seems really easy. And as you say, the bets are all one-sided at this point. And I'm just saying from my long experience is, it's never really that easy. So, yeah, I'm with you, though. I would say people have to be very ready for a surprise, which is why I liked Lance's advice. You know, your portfolio shouldn't be created, or your trading position shouldn't be creating with, I wonder how I can make the maximum amount of money. No, that's not the goal necessarily of investing. It may be to keep ahead of inflation, purchasing power, whatever you are, making a living from it. But the bottom line is, some of that attitude gets a little extreme at this point, and that's what's keeping me up at night.
Well, there's a famous technical analyst that worked at Merrill Lynch for years called Bob Farrell. You'll probably remember the name. And his rule number 4, he had 10 major rules, and that was that exponentially rising markets usually go way further than you think, but they do not correct by going sideways. So we're talking about a possible shock into the market, and it's just, here's a thought, okay? It might be that the shock or the trigger for a correction in the market might be political rather than economic. We got a lot of, political, we got a lot of dry powder out there in terms of things could go a little haywire politically. And while I'm throwing some cliches at you, here's another beauty. From the old boys on the floor of the Chicago Board of Trade a long time ago, one of their sayings was, and they're referring to the public, when they're yelling, you should be selling.
And I love that. Some of those things come because it's great advice. And I love you coming back to Bob Farrell. I remember him well. I was working in New York when Bob Farrell was like the guru, or certainly of the institutional, analysts in the major investment firms. But I like that expression. He says, exponentially rising markets go further than you think. And I think that's very true. We've both experienced that. But they don't correct by going sideways. In other words, it's not sort of a calm correction. It's the old what goes up goes down pretty hard.
Yeah, and Mike, just to be honest or fair here, I don't expect to make huge profits this year on a trade just because I saw it coming, like the winners did in that great movie, The Big Short, or the book that Michael Lewis wrote. I'm just going to grind away using my normal techniques to get into the market. And one of the reasons, by the way, I'm not going to put on a trade that, I can say I saw it coming is because the market could go a lot more in the direction it's going, and I would take a substantial loss betting that it was going to turn, and that's just not my style. I really want to protect my capital. So maybe for folks that are investors, I think that's great advice that Lance gave, kind of dial back to a more a less aggressive position. For me, I'll be looking for some chances to maybe catch a break in the market. But that'll just be using my typical techniques and managing risk around it rather than trying to swing for the fences.
Let's get a couple of markets very quickly here, Vic, just to set the table. I'm not talking with Mike Levy earlier on. He's looking at the Canadian dollar. I'm still looking at that. I think it was in first week of September. You called that turn date, 83 cents. I'm looking at that level for the Canadian dollar. I'm not surprised that it's had this bounce here. It's been more aggressive than I would have played for, but I'm not surprised at the bounce. I'm looking at the 83 cent, which it hit in the first week of September. What's your take on the Canadian when you've seen the trading this week, which was, as I say, pretty powerful?
Well, I've had a bearish bias on Canada for a number of years, and I've done very well with that. Canada did trade sideways for the last couple of months, say from late October through the middle of December. We traded between around 77 and 79 cents. We broke out here at the tail end of December as the U.S. dollar was weak everywhere. So many times on this show I've said it's not about the Canadian dollar, it's about the U.S. dollar. The U.S. dollar is going down, the Canadian dollar is going up, and that was really that was sort of what happened across currencies. I mean, the U.S. dollar was falling against everything the last couple of weeks of December. I've still got a bearish bias on Canada. This is I think we're so dependent on real estate inflation in this country. We've got sky-high consumer debt disposable income ratios. I mean, NAFTA is coming along, and one of the things that Michael was saying about the Canada and the oil price, let me tell you, our oil, the benchmark for our oil is Western Canada Select, and it's at a huge discount to WTI. I did an eyeball analysis here in the chart. Since September, the price for Canadian oil has been about $40, not 62.
I think that's such a great point. I alluded to it right at the outset with my comment that it's costing us something like $75 million a day because two-thirds of our oil doesn't get world prices. So it is great to hear that oil prices bounce up. Maybe there is some sort of knee-jerk reaction to that in the Canadian, but you're absolutely right that we don't get that price. We get the Western Canada Select price for two-thirds of the oil generally that we get, and that's a much bigger discount. I think it's a great point that you're making there, Vic.
And behind that, Mike, just as a quick aside, Canadian nat gas prices are are low as well. And that's because the Americans are finding so much nat gas they don't really need ours, and they're a net exporter of nat gas. Everybody pays attention to the WTI price in New York, but these Canadian prices for our major exports aren't really all that strong.
I'll leave you with a quick stat here, Victor. The U.S. is about to, we'll get the numbers this week, the U.S. is about to have the lowest emissions per capita, CO2 emissions per capita in 25 years. So despite all the talk about climate change and President Trump, et cetera, the U.S. has made more progress than any European country and certainly more progress than Canada, and it's got all of it to do with them producing natural gas and using it, which has lower emissions. It's just interesting, as you say, your natural gas point is very well taken. The U.S. is awash in it. There's going to be so much to talk about this year, though, Vic, and I know you'll be talking about it with me, by the way, and everybody at the World Outlook Conference, too, which comes up February 2nd and February 3rd. And I hope you join Victor, and I hope you join myself. The track record's been excellent, but we've tons to talk about. Your chance to talk to Victor in person. I look forward to seeing you there, Vic.
Well, Mike, I look forward to seeing you there, too. It's always, what is that, about your 27th version of
I don't know. We just keep hoping when it's in my case, Vic, that I won't be in a walker when I see you then.
Okay, Mike.
All the best for the new year. Thanks, Vic.
Thank you.
Take a break.